Hello and good morning, listeners. This is Almus Market Mornings, your daily dose of global financial updates with me, your host Shikhar Garg. Now, we were recently going through the RBI data, which also showed the kind of subdued capex activity India was facing, just like USD INR, which was subdued only for yesterday, though. The minimal action with a visible, minor breach above the 80 handle, but more so or less, it was held quite well. And JK, we also saw global equities were quite active yesterday. It seems as if the market participants were in some mood to taking some risk. So, do we see any follow through in India? What do we expect for USD INR? What's your take?
Good morning. Uh, yes, I think it was a rare follow-through rally in the markets in recent times. We had a big rally on Friday, then Monday we paused, and then Tuesday we had another big rally. No major new factors were at play, except that more and more there is conviction that there will be no 1% hike by Fed next week. It will be only 0.75. Then in Europe, there's positive news that the Nord Stream 1 gas supply channel would be open next week, although Germany still keeps a cautious observation about it. ECB is also likely to announce its anti-fragmentation tool when they meet tomorrow, and most likely the QE will end, QT will start, and so there's a confidence that even ECB is coming into to terms with inflation and probably restoring its credibility. So that was some driving factor for the markets to go up, apart from compared to other days. The overall corporate results on Tuesday were better. Definitely, I am not still seeing this as a resumption of the bull trend in the markets or stock markets. At least the technicals don't show it that way. But yes, rally was impressive. I do feel in India also there will be some more follow through. I am also seeing some sector specific moves happening in India, particularly the PSU sector and all that. So it can have, but I am still skeptical that this is going to be a new bull run for the stock market, because we are nowhere close to the global financial tightening ending or any fresh infusion of liquidity. All that will take time. That's about the stock market. Is definitely all markets gained more than 2%, and despite the fact that oil prices were still higher. Another big thing that happened was the Euro's move, which just built on its rally of the last 2-3 days, and touched a high of 1.0268, which is resistance zone. Should this be broken, we may touch or rather test the key resistance of 1.0350, which was also the breakdown level for the euro. You would remember that we were coming down to 1.0350 for several times and bouncing, and when it broke, we just lost 2% on the euro against the dollar. So that level may be tested either today or post ECB, depending on what kind of outcome is seen from their meeting. So euro has definitely made a good recovery of about 3%. Then GBP also has made a good recovery based on GDP data, which beat expectations, and steady employment data, which came yesterday. Andrew Bailey of BOE has said that there will be a possible 50 basis points hike in the meeting in August, and they will be reducing their bond holdings also by fresh sales into the market. So again, most of the central banks, no, that is important. Most of the non-US central banks are restoring their credibility on fighting inflation. That is why those currencies are now getting some benefit. Of course, just to give an additional news on UK, Rishi Sunak, he's emerging as the front runner to succeed Boris Johnson as the Conservative leader and possibly the prime ministership. So that will be a big moment for India, somebody from Indian origin heading a country like UK. That apart, bond markets were kind of subdued because they are all waiting for ECB meeting, and some uptick was seen in the 10-year yields, but again, nothing much to write home about. It's still moving in the small range, and 10 to 2 is still inverted. So all eyes on ECB tomorrow. And if coming to dollar itself, apart from euro, GBP rallied, and yen, of course, we have a meeting of Japanese central bank tomorrow. Very few in the market would bet on them changing anything, either the rates or the bond buying program, because according to their words, they have not hit 2% inflation targeted. And I would actually wonder how the CPI is calculated there, because oil alone has gone up by 30% in the last 1 year. And most of the commodities are imported by them, being an island country. So it's something that we need to look at deeply. But 2% inflation not being met, they will not change anything. But why dollar yen should come down around 2% despite that is because of the reduced expectation on US interest rates instead of 1%, 0.75%. Incidentally, Hong Kong became the first central bank to actually intervene in the market to defend their currency against a steep fall against the dollar. So that's another interesting thing that's happened. Whether more countries are likely to join if their currencies fall steeply is something that we need to wait and see. We also have the Italian political situation, which is likely to get some more clarity today when Draghi returns from his short holiday, and he would be confirming whether he will continue, because that is there's a big support line that has built up for him to continue, being the crucial time of the year when they don't want the country to go into a new election, because budgets are due and the election funding, etc., will be not possible if election is held without holding the regular sessions of the parliament. So that's just about something. So if he continues, that also may actually support the euro. There is a bit of skepticism about China because their number of cases have gone up to a new high yesterday. So that may be one limiting factor for the risk rally to be continued. So coming to rupee, we hit the magical level of 80 again, 80 yesterday for the first time, of course. Good selling by PSU banks at that level, and it came back to 90s and stayed there for whole of the day. I think most of the action was from PSU banks, oil buying on the one side, and the other nationalized bank supplying the dollars on the other side, keeping things very quiet. Don't expect much action today as well. But just I'll end today's commentary with some observation that USD INR broke into 60s for the first time in June 2013. And immediately on breaking 60s, it lost as much as 13%, went to 68, 80, if I remember correctly. Then after some in consolidation, post that, we came below 60 for a very brief period. And after that, for 5 years, till August, we traded, or rather 4 years, we traded in 60s. Broke into 70s after 4 years in August 18. When we broke 70, we made a rally of 7% higher, touching, I think, 74.50 or 74.48. After that, again, we consolidated. And in that consolidation, we broke below 70 briefly. And again, since then, consistently, we are traded above 70. So are we going to see, if 80 is consistently broken, another 5 to 7% rally in the USD INR? That is something I'm still looking at. Technically, we don't have any sign of reversal. There is no change in any of the fundamentals that has been guiding the rupee lower, barring some measures by RBI and intervention. Barring these two, no factor has yet worked in favor of the rupee. So maybe RBI is aware of when the big figure breaks, so that kind of move can happen. Is something that might be guiding their action. So really keeping my fingers crossed. If definitely if there is a brief dip to 79 also, I think going by the current fundamental setup and the technical setup, one should be buying up the USD INR for a good, I mean, to hit the target before it actually comes down. Yeah, thank you. I'm not giving a very bearish view on the rupee, but this is an observation from the historical perspective.
Okay, JK. I mean, that was something substantial of an observation. I mean, it just really awakened me quite significantly right now, early morning at 9 a.m. A view which was, quite good an observation. So, folks, as you heard, we need to prepare ourselves and manage the risk. USD INR can give a move on both the directions, but majorly with the kind of macro and so fundamental setups are visible with no resumption on the downside on the technical side as well. There are possibilities of a move on the higher side, but any dips we can look to manage our risk on the buy side. So folks, be prepared for managing your risk really well. I also like to highlight a couple of points as we mentioned that equity markets are seeing some follow through and resumption of a bullish trend. Though this is a resumption, but it's not exactly a bull market as JK mentioned. The tightening is not yet done. We are still grappling with inflation, and the markets are seeing just some sector specific action. So it's good to continue having a good grip and good hold on the risk that we are dealing with and managing the same. We'll come up again tomorrow with another round of fresh updates and also another update on the ECB's actions, as tomorrow we have the ECB coming up with their commentary on the inflation. So watch out for tomorrow's commentary. Till then, we take goodbye. That's it for today.